Friends, there are many videos on YouTube about candlestick patterns. We have also made several detailed videos on candlestick patterns. All candlestick patterns are understood. But in today's video, I will not explain candlestick patterns to you. Instead, I will explain the psychology behind candlestick patterns. After which, you won't need to remember any candlestick pattern. Even if you talk about any candlestick pattern, whether it's the hammer, bullish harami, shooting star, or bullish engulfing. All these candlestick patterns are based on this psychology. So today what I am going to teach you about candlestick patterns, if you understand this, then just think after this you won't even need to look at candlestick patterns.
But for that, you must watch this video carefully.
So let's start this video. So friends, whenever you look at a chart, you will see different kinds of candlestick patterns. Sometimes you will see such large green candles, sometimes such large red candles, sometimes you will see a doji candle like this, and sometimes you will see this kind of to be, geek to be, dark to be tube. You will see long wick candles. So first, let's understand how the long wick candle forms and what is the psychology behind it. And by knowing this psychology, how you can plan your trade. So suppose the market is sometimes in a downtrend,
and after that you see a long wick candle like this. What does a long wick candle mean? This thin stick, we call it a wick. Now assume this is a green candle, so what would have happened in this case is that the price was initially falling. After that, the price opened here for 1 hour. If this is the time frame, then in this 1 hour the price opened here, and after opening the price went down a lot. Because of which a long wick was formed. But within that same hour, the price started rising again and closed above where it opened. If this happens, then this candle will appear green to you and its wick will be long. Now look, whenever this candle forms, the chances of the price going up increase. But the condition is that this candle should form near support.
So the logic behind this is that when the market was in a downtrend, meaning when the price was falling, why was the price falling? I told you before, the price was falling because there were more sellers available. This means there was more supply in the market.
That's why the price was falling. So now when this candle formed, what happened at this time? At this time, there was still supply in the market. Because of this, the sellers drove the price all the way down.
But in this same time frame, if this is a 1 hour candle, then in this same time frame, when the price reached this level, many people thought, oh, this stock or this crypto is available at a very cheap price. So they started buying. Now when people began buying here, and many people thought this stock was available at a cheap price. So at this point, the demand for this crypto or stock increased a lot. So when demand increases, what does it mean? There are more buyers. So now earlier in the price, there were more sellers. Now there are more buyers here. As a result, when the price fell so low, they pushed the price back up. This means in a downtrend, if this long wick candle is forming, it indicates that initially there were a lot of sellers in the market, but now in the market here,
buyers have increased.
the demand for the stock has increased, and because the demand for the stock has increased, there are more buyers. This is why the candle we have formed is a long wick candle. And because now the demand has increased here, more buyers have entered the market. So there are chances for the price to go up as soon as this pattern forms on the chart. Do not think that because there is demand in the market, the price will increase. So I should buy quickly. This means you should not buy just by looking at the candlestick pattern. You have to use other confirmations as well. Now, what could those confirmations be? Let's understand this as well. The most important thing in this is support. I'm telling this once. It will be applicable for all the candlestick patterns ahead. So you can confidently take the trade based on this candlestick pattern when you see that this candlestick pattern has formed near the support. This means you see that the price had previously increased after coming near this level. Again, the price increased after coming near this level. And for the third time as well, the price has come near its support and repeatedly rises from here. Along with this, you also see that our long wick candle has formed here. So, from here, you will understand that repeatedly the price increased upon reaching here. Additionally, there is demand here, which is why a long wick candle has formed. So, you can be somewhat confident that there are chances of the price increasing after this. This means that you should confidently make a trade only when this candlestick pattern forms near the support.
This candlestick pattern too.
This means first the price is rising and then a long wick candle like this forms, meaning the wick on top is long, so there are chances of the price falling afterwards. The logic behind this is that the market was in an uptrend, meaning the price was rising. Now, why was the price rising? It was rising because there was demand in the market, more buyers were available, which is why the price was rising. Now the price increases and reaches this level. After reaching here, when the price opens up to this point, there was demand in the market, so the price increases and reaches this level. That is, it makes a high.
Jeez. But as soon as the price reaches this level, many people think that this stock has become expensive and how much higher can the price go, so they sell. Besides, many people also feel that the price will fall after this, so they short. They sell. This means what happens here is that many sellers come in, and when sellers come, the price falls. That means supply has entered the market, after which the price falls and the price goes here to close. Happens. So if that happens, we will understand that earlier there were more buyers available in the market and now there are more sellers available, after which there are chances of the price dropping. But just by looking at this candlestick pattern, you should not short or sell. You will be confirmed when this pattern is forming near resistance. That means you can see that repeatedly. When the price comes near this level, it falls from here. And after this, the third time you see that the price came near this level, it tried to rise, rising to this level, but then many sellers came in, and if the price comes here, then we realize that the price had come near this level twice, and the third time the candlestick pattern also gave confirmation. After this, there are chances of the price falling, and you can consider shorting here. You can think. So now you understand why when a long wick candle forms like this, there are chances of the price falling, because we understand that there are more sellers in the market currently, and when there are more sellers, more supply, then there are chances of the price falling.
What happens next is the candlestick pattern you might see on the chart, which is multiple long wick candles. Sometimes what happens is that the price is in a downtrend and then a candle forms with a long wick. Then again a candle forms and its wick is also long. Again you see a candle, its wick is also long, or even if there are two candles, that will also work. That means you repeatedly see candles with long wicks. It's receiving. So if this pattern forms, there are chances for the price to increase afterwards. Now you must understand why there are chances for the price to increase from here, because you know that the price was repeatedly trying to go down. Initially the market was falling and sellers were trying to bring the market down even more. But buyers keep coming in here repeatedly. People are coming in to buy, which is causing the price to go up. Once again, buyers came in and the price increased. It became clear to us that this area has a high demand in the market. Sellers tried their best, but there are more buyers available here, which is why there are chances for the price to increase. Do high sort, hard source. And again, if this forms near the support, then the chances are higher. Now a question will arise in your mind that when the first long wick candlestick pattern was formed, how would I know that the next one will also form? I would have bought here, placed a stop loss below, and if again a long wick candle formed, my stop loss would be hit, causing a loss. Will form. So see, you cannot know in advance that just because this long wick candle has formed, the market will go up or another long wick candle will form. So how will you take the trade? It is important for you to understand this. Suppose your long wick candle forms and it is forming near support. You are confident that the price may rise from here. So what will you do in this case? You should not just buy as soon as this candle forms. When should you buy? You should buy when the next candle forms after this one, and it is a green candle that is above the previous candle. Gives a closing. That is, as soon as this candle gives a closing here, then you will buy here. When it closes above, then you will buy. So after this, your chances of the trade being accurate will be higher. While you've seen that, brother, the closing has been received. Wherever the price is going, I will straight away buy. I take it. After this, it may happen that this candle goes down, your stop loss gets hit, and later it might go up again. Then you will say, I was right, but I incurred a loss. So that loss happened because of your greed, buying wherever you felt like. Now, just buy you I buy. Sometimes the opposite can be seen by you.